So Costco, you can see year to date, we're up 12%. So kind of in line with market, what's going on with them, which is pretty good. Let's go down here. Current share price 961.31. And we have hit that 10% off opportunity there at 986.85. And then as you can see here, go to our daily chart, it's either below support or we're at those key levels. You can see 200, 253, 400, and then you go to the 100. This is our big winner right here. This is showing a very strong potential here for a opportunity to go ahead and purchase or build a position, right? Because again, remember, weekly shows a stronger indication of what's going on with that name or that stock that you're looking at. The daily chart, gives you opportunity, like I said before, to nibble, get a starter position, get a starting trade, whatever it is that you're trying to do with that name. But weekly definitely solidifies what's going on with that stock, in my opinion. So definitely had the opportunities there. Let's go ahead and look at the swap for it real quick. Obviously, a big strength for Costco, big moat for them is that membership. And that's also where that pricing power comes in. They have people, millions of customers that flood in. They can raise the membership fee. They're still going to pay it because Costco gives you that situation where you get more bang for your buck. You could buy in bulk, things like that. So $65 a year fee, loyal shoppers, and then also within that membership fee, there's tiers in there, right? You go executive club level, things like that. Let's see, Costco's revenue engine is accelerating. You see the past trailing 12 months hit $293 billion. The year-over-year growth of 21.5%. Very good to see that. And then balance sheet, obviously net cash positive. So $11.13 billion in cash versus that amount in debt. And then return on equity, you'll see that notice usually when you're looking at forms is ROE, 29.2%. So that's very good. They're able to, flip that money and get a 29% return on it. And then low beta. So beta is basically how volatile the stock is. Usually a beta of 1 is what's on par with the market. So anything under 1 means it's less volatile than the market. A beta over 1 means it's more volatile than the market. So if you see a stock with a beta of like 2, it's twice as volatile than the market. Let's go to weaknesses. So margins, structurally microscopic, leave little room for error. So definitely, same thing as with Walmart, margins are being watched closely. And then it says valuations price for perfection. Usually when it says that for a stock, it means like what customers, or I should say what investors are paying is price for perfection, right? So everything has to go right to justify the premium investors are paying for this, right? And again, this is another one. PE ratio, the trailing for this one is 48.43, and then the forward is 42.5, right? Again, how we mentioned about Walmart, that's tech-like valuation, right? In terms of looking at price to earnings. Because remember, price to earnings is the premium you're paying for every dollar they have earned, right? So usually historically for like the S&P 500, PE ratio is usually, I want to say it's like 22, 21. Over time, it's definitely started going up a little bit. Used to be in the teens, believe it or not, like the high teens. But I think right now we're in that low 20 to mid 20 is kind of like what's normal for the S&P 500. So again, it's just a metric. Definitely use it in comparison to other companies if you are going to try to follow ratios and things like that. So compare consumer staple to a consumer staple. Don't try to compare a PE ratio to a company that's in utilities. Don't compare a real estate company to a company that's in software. Like, don't do that if you are going to try to go ahead with that. And then geographic concentration. Costco's mainly in the U.S., as we know that. But that could also be flipped on its head as an opportunity. Hey, could they branch out? But for here, it's signaling it as a weakness, right? So then let's go over to opportunities again here. Yep, we just said it. International expansion. So Costco operates fewer than 900 total warehouses globally as of 2026, and signaled the potential for hundreds of additional international locations, particularly in unpenetrated markets like China, France, and Scandinavia, where the warehouse club concept is still early stage. So that's a promising sign too, to go ahead and hit untapped markets, definitely build out that TAM, that total addressable market for them. That just equals out to, if it pans out right, equals out to more money, more revenue for them to build, more memberships. So that's why long term, obviously, we can see Costco still keep being a powerhouse, still being, great in the space. E-commerce, me personally, I'm not too familiar with their e-commerce situation, but same thing as you look at other players in the space, like I said, your Amazons, your Walmarts, they have been doing amazing in that space, and other companies are going to try to follow suit if they could try to figure it out, right? So for Costco, how are they going to try to do that? Are they going to, deliver into more delivery situations? I see here they mentioned Instacart, right? But I don't see a Costco van or a Costco truck, having employees hop into a Costco vehicle and go do delivery, stuff like that. Like we said, Amazon, Walmart, they do in-home deliveries, people coming in there, putting stuff in your garage, putting stuff in your fridge for you. That's gonna be hard to compete with. Even Target's now tapping into more heavily into the e-commerce delivery and groceries and stuff like that. So for them, it could be an opportunity, but I feel like it's not as big as an opportunity as they may come out to be, right? And then we got some analyst reviews over here for the next fiscal year. $325.33 billion with a B. And obviously Costco's ability to raise membership fees. And it seems like, in 2024, last September, in 2024, they raised that up. And then they obviously have that annual member rate where they keep on renewing, the annual renewal rate of 90% plus. So over 90% of the customers come back and renew that membership. Like I said, once you get into that ecosystem, it's almost like getting into the Apple ecosystem. You get so ingrained in it, so used to it. It's like they're very sticky. It's hard for you to leave. And also, like I said, if you build your life around it, so a lot of people, all they do is Costco, right? I remember when I used to live down south, we were close to a Sam's Club. Sam's Club is like a weekly thing for us, right? It's almost like it's a mini version of Costco, right? Same concept, same type of opportunity, but Costco is just different, right? In terms of the hold they could have on people. And then they have their private label, which is Kirkland. They've done a great job building that out as well. And it says that here, pharmaceuticals, health, wellness could expand the 25 to 30% revenue mix attributed to Kirkland, right? Driving higher margin sales. And then again, back to what we are saying, strengthening member stickiness and reducing dependence on branded CPG, which is consumer packaged goods from other companies, right? So basically creating their vertical integration, right? That pipeline of their own products, so they don't have to keep on relying on, the Coca-Colas, the Frito-Lays, the other companies out there, when they could just, if I can make my product, my signature product, as good as yours, why would I pay you this money to have someone come in here stock the shelf while my own employees are stocking the shelf for your product when we can make it ourselves, right? And we have a almost cult-like situation around it, right? People love Kirkland. Then we got the threats. Again, tariffs. You're going to probably see that a lot with some companies. Tariffs. Remember when it was going on earnings call, everyone kept talking about tariffs. And then for them, Amazon and Walmart, right? Because they're doing their own warehouse club adjacent offerings. Then we got Amazon's Prime membership ecosystem and Walmart Plus ecosystem that are growing quickly. I'm telling you, this is going like hotcakes. It's going crazy out there for those memberships, right? But Costco still has that, treasure hunt format. A lot of things you can only find at Costco, right? And then competing with wallet share. But I feel like people are going to divide it up a certain way. Either they're going to be hardcore Costco, or they're going to pick and choose the players that go into the space, right? But at the end of the day, you're fighting for attention. And then Costco, labor cost inflation. I don't know if you've ever seen that graphic going around about how much they pay Costco employees. You got some employees making well over $20 an hour, right? I think some managers are making over 30. That's definitely going to eat into your cost, right? Again, you got somewhere like Walmart who employs most of the country or a good portion of the country, right? In terms of, labor force, and they pay, a very small amount in terms of dollar amount per hour. Got somewhere like Costco, pays a pretty high premium for their employees. At some day it's gonna, eat into your cost, right? So let's see here. Wage growth outpaces productivity gains will squeeze an operating margin already sitting at a fragile 3.7%. So yeah, and then the thing is, then paying those high costs in labor, that's another sticky factor. Like I said, you can flip these situations onto their head, right? Then paying that high of labor costs for certain employees or the majority of the employees, it's retention. Your employee most likely is going to stay. They're not going to be able to find that kind of compensation elsewhere. So there's a good, strong chance they're going to stay. But also, you kind of got to try to keep up with the pace of inflation. So depending on that pay scale, how quickly are they doing the pace of inflation over 3%? Let's go ahead and keep those employees. Are employees going to leave? But we'll see. But that is definitely something to pay attention to, that labor cost inflation. And then consumer spending slowdown, inflation fatigue, rise in credit delinquencies. So it's the same thing, right? How strong is the consumer going to be, right? Because again, they are paying a membership fee, and they also have to go in there and shop and pay these prices. And also, some people, you're looking at the people who aren't really having a family structure, right? You're looking at the people who are, household of one, a couple. They probably aren't going to be going to Costco like that, right? Or maybe they were, and I was like, oh, is it really worth going? I'm one person. I could go, to Walmart. I could do some of my spending at some, step down names like Dollar Tree, Dollar General, to go ahead and get my little bits and pieces of things that I need, right? So it's those type of stuff. And also, I forgot to mention with the last name we looked at, Walmart, we do have the little wolf catcher take at the bottom, which gives you a nice summary of all these things that we just went over for the SWOT. So let's go ahead, dive into the chart for Costco on the daily. So we can see here, nice hit to the all-time high. And then it's the same story pretty much, right? Same thing. Well, this happened more so down here, but hit all-time highs, but right going into earnings, right? Earnings were just a couple of days later. Same thing with Walmart. Earnings was like probably about a day away. After earnings, took a little tank. This was leading into earnings. Started, I forgot to map out a little gap here. It was the same thing. They had, their situation was earnings was a couple of days away, and then they fell off. And also, some of these names are going to move in sympathy with each other, right? So Costco can move in sympathy with Walmart, depending on what Walmart says, and vice versa. So at the end of the day, they both are doing a nice pulse into how the consumer is, right? But we can see here with Costco that we are right at the 200-day moving average, right? We fell below it, reclaimed it a bit. We haven't closed above it. So basically, we'll see how tomorrow goes. This is today's candle right now that's going. So we have intraday, right? Gotten above the 200. We're right around the 253, 400. So obviously we want to see next future sessions us close above this, keep rising up, and then for them challenging this 100, and then they get above that. And again, concept is to try to get above the moving averages, right? But you want to get your positions and enter these names when they hit key moving averages, right? So again, this is what we focus on. Look at opportunities. You'll need to always chase something that's at an all-time high. and have FOMO, fear of missing out. And then even if you have fear of missing out on a certain name, I guarantee you there's another name in the space or the name in an adjacent space, you know, that you can take advantage of, or a whole nother sector that no one's paying attention to. So we got here on the weekly chart again, right here at the 100, it's kind of hitting that support here. So the 100 weekly moving average is acting as support for Costco at the moment. Let's see if it can hold it. Same story. Hold, trade, consolidate sideways. As you can see here, we had the consolidation here before we went ahead to that all-time high. Hit that, then that sell-off continued for it. But again, great quality name, right? So this is the when you're going hunting, when you go stock picking, things like that, you want to look for quality names, right? Granted, there's going to be your speculative picks, right? There's going to be your speculative names out there that are going to run, that are going to have great opportunities and buying opportunities. But I just like to go ahead with names that are proven in the space, that definitely have a strong impact